Hey everyone, in today's episode I'm going to discuss the Melbourne boom beginning. I've spoken about this literally for about a year and a lot of people did listen to me, some didn't, but for those that didn't, I just want to let you know that you're already past the bottom. You are actually already a little bit late to when a lot of the good deals happened. Mind you, there will still be good deals for the next 2 years, but for those people that didn't want to listen, I'm telling you right now, the Melbourne market has already picked up. It is off the bottom. Sure, the statistics probably on CoreLogic show that, but I was talking about this at the turn of the year. So in today's episode, I'm going to get into a few things. First of all, the current indicators. Second of all, the further historical and fundamental indicators. Thirdly, what's going to happen. And then finally, the best locations of Melbourne. So look, the current indicators really it's the immediate movement in growth. So look, I'm not sure if anyone follows CoreLogic data here, but this is just called the daily rate tracker. So you'll see here the Melbourne actual line graph here is you kind of like teal sort of color there, and you'll see obviously over pretty much all of 2024 it was, I'd say, probably a bit light. It was probably sliding down slightly. At that time, mind you, I should say that was mostly due to your outer markets not performing very well. That did actually have a lot of stock on market. You trust me, if well-priced, fundamentally good suburbs were pretty flat in that time. What happened though is as well in that time that made this happen was your very top end suburbs. When I say very top end, I mean your Kooyongs, your Chiraks, Malvern, your Mont Albert, Deep Dean, Camberwell, Brighton, those sorts of suburbs. What happens when the market's cold is the very top end of the market where you have like properties selling for like 10 and $20 million. They don't sell their homes at that time. They will wait till the market goes up to sell their homes. So what you have happen is the suburb median drops a lot further simply because in that time frame, what happens is you've got, let's say instead of 10 properties in a year selling above 10 million, you've only got 5. So the median gets dragged down in the top suburbs because you don't have the top end of the market selling. So that's what was happening at the time. And a lot of people don't know that, but that's what was going on. So I would say actually the mid and top end of the market was actually flat in that time. But what happened was obviously no high-end sales in the top end, and your outer suburbs that historically do not do very well were actually falling back. So that's what caused it. But if you look now, sort of over the turn of the year, it really did start to flatten out, and it started to slightly pick up now. So when that happens, what it's saying is you're genuinely off the bottom of the market. So that's what's actually happened there. Look, furthermore as well, in Victoria, and not only Victoria, in Victoria in general, but Melbourne, this is especially what's going on. You've got more owner-occupier purchases. So this is just from NAB's quarterly report, and this is in the March quarter 2024. So this is actually more recent than you'd get, should I say, ABS data. You can see Victoria's got 49.6% owner-occupier purchases, or sorry, that's established home sale purchases, but that's by owner occupiers, and that's the highest in the country. So that inherently actually makes the property market stronger because owner occupiers hold on to properties for longer. Now, on the ground, really, what you'll see here is when you go and look at homes in Victoria, especially in Melbourne, in good suburbs of Melbourne, you don't have many investors going into these actual houses to look to buy them, and it's simply because a lot of them are anti-Melbourne because of taxation, especially land tax and compliance reasons. However, what I should say to people is when you look at buying a property, if you have to pay $2,000 land tax, but you're making $200,000 more in 10 years, who really cares? Like, you're buying it to make money. It doesn't make that much of a difference, really. But that's what I'm just pitching myself there to people to say that if it's an investment, it's a financial decision. It's not an emotional decision. So don't get caught up in media hysterics because most of the media broke art students that don't know what they're talking about. So that's what you need to just consider. Another thing I did mention, less investors looking to buy, but also the other issue is a lot more investors are selling. So this is just an article. This is in early 2025. So this is at about the turn of the market. I'm telling you, investors are not in the market at the moment, but they will come back the minute the market starts to really heat up. It is off the bottom now, but when it starts to really heat up, because investors, most of them are idiots, what happens is you'll find that they will flock back to the market the minute it starts to pick up, and that will 100% happen. But in this article, you'll see Victoria loses more than 24,000 rental homes as investors flee the state. So as I've been saying, if you go to open homes, look, the reality really is you're probably getting 8 out of 10 to 9 out of 10, depending on the suburb, of people looking to buy are actually owner-occupiers. But it's about 1 in 2, close to 1 in 2 investors, especially investors of homes, are selling. Most properties that I'm buying for clients are actually, not most, but a lot are actually investor sales, because you've got a property that's clearly compliant, which is good, and you've got investor who wants to sell and just get out. So I generally do get decent deals on that. But I mean, if you look long term at this, what you're going to see is you'll have a lot more owner occupiers, but the same demand. So that means less stock, more owner occupiers, and the same demand. So the same amount of renters wanting to live in the state, possibly even more when the market goes up, because less people will be able to afford it. Plus you've got immigration as well. So these are very simple economics, but it'd be significantly probably less supply, whilst the same or more demand equals higher prices. That's what's going to happen, despite whether people like it or not. You can put as many controls as you want on the market, but the reality is the market's still going to do what it's going to do, regardless of how many controls you try to put on it. So let's just be realistic here. That's what's going on down in Victoria, especially in Melbourne as well. Look, furthermore, we've got undersupply in future stock. So this is just Matusik and ABS data. Look, very accurate data as well. So this is just data based on projections right up to 2030. So this is per state. If you look at basically what you want to look at is, so to give everyone an idea of the columns, the first one you've got here is the underlying demand for dwellings. The second there is the actual dwelling commencements. The third then is the difference between the two, and then the final column, which is the most important, is the actual percentage difference, or whether it be short or undersupplied or oversupplied, as you can see there. So if we just look at this graph here, you can clearly see South Australia and Western Australia are going to be very oversupplied in the future, and it runs almost perfectly with what I'm saying, that they're both basically in their winner's curse stage of the cycle, whereas you can see both New South Wales, Victoria, Queensland as well, Tassie, the NT and the ACT are undersupplied, especially New South Wales and Victoria. Don't get me wrong, the Northern Territory will be as well, but it just doesn't have the industry to justify investing there. But New South Wales and Victoria, that is going to be mainly the major capitals and the regional centres, because that's where all the immigration goes, and that's the reason it's so high. It's because the immigration going into there is ridiculous. You actually have, believe it or not, a net negative in terms of domestic immigration, usually in both New South Wales and Victoria, and this has been the way for about 20 years, have a loss, and they generally move to Queensland, and some also move to WA. In saying that, that's where the domestic immigration goes, but the international almost solely goes to New South Wales and Victoria. So that's where those numbers are. So for those that want to debate this, look, there's no real question here. There's going to be a lot of undersupply, particularly in Victoria, in Melbourne, and probably Geelong as well, with those international immigrants coming in. And it's not really helping, considering that all the investors are selling up either. So that's just the reality of where we are in Melbourne, also at the moment, and will be in the future. Let's get into some fundamental indicators, and look, firstly, what we want to do is we want to go to the historical performance of cities. So this is just, and the reason I love this actual data set is because it's pre-COVID, when you didn't have a 0.1 basically free cash society. And you'll see here, you've got Melbourne, they're doing 8.1%, Sydney at 7.6%, and then everywhere else basically lower. Now, one thing I'll say with this is Brisbane will do better than this, because it's become a lot better in terms of the fundamental industry there, and the actual headquarters, the GDP, business is moving up there because taxation is a little bit better. And so there's one of the large reasons for that is payroll tax is quite good in Queensland compared to other states. But This is your fundamental historical performance. Now, Melbourne's done next to nothing for about 6 or 7 years now. You can argue 8 in some areas. Especially, look, overall, it's probably done about 20 to 30%. But I mean, the suburbs that have fundamentally done nearly 10% growth have done nothing for that time. So, overall, what would generally happen is suburbs generally revert to their long-term trend. So, what you'll see here is so what will happen is you'll have Melbourne has underperformed recently, so it'll probably overperform in the future. So this is what's going to happen. Great area to buy. This is one of the fundamental reasons why I love Melbourne, and it's one of the best not one of the best, it is the best area to buy in Australia at the moment. For those that didn't see my property clock recently, this is where everything's at. Now, when my July update, I guarantee you Melbourne will have moved by then. This number right as this second would be at the 6. I imagine the overall number will be slightly above the 6 by the time I actually make my July property market update in terms of the property clock. But this is where they all are. So if you want to go back to the undersupply, oversupply in the future, you'll notice that I said both Perth and Adelaide are going to be oversupplied in the future, and it lines up perfectly with where these markets are at. Brisbane's still got a little bit to go, so obviously you could see there's a little bit of undersupply, and that's because obviously we have the interstate migration and obviously a little bit of international demand with the Olympics coming up too. So this is where they're all at. So that's another reason you'll see basically, these areas perform like they do, but Melbourne is absolutely perfectly positioned there. And I'm telling you right now, this has already moved. By my July update, it'll be even further along past that number 6. Let's get into immigration. So my favourite topic, if for people that know me, you'll see here, this is just population change by capital city. So the dark blue there is your interstate immigration. Then you sort of say lighter blue is your natural increase. And then your actual sort of orangey there, that there itself is your, should I say, overseas immigration. So as I said to everyone, almost all your overseas immigration pretty much goes into Sydney and Melbourne. The vast majority, I think it's about 65 to 70% of it, if I'm not mistaken. But this number will go up in terms of the percentage to Sydney and Melbourne as well. You can see Melbourne's actually got higher than Sydney, although Melbourne itself actually has less internal migration. So that's not a good thing in terms of the market itself either. But anyway, that's what's going on there. So that's not going to really help the market in terms of where people are going. But anyway, it is what it is. And finally, look, what really here is going to happen too is you're going to have either one or two things. Look, it's likely, especially since the Liberals in Melbourne changed their leader, that probably Labor will be voted out because of their horrific policy. And this is just obviously a two-party preferred poll graph. So the Liberals are ahead now. Look, I'm not going to say that's 100% certainty. Look, things can change 100%. But what's going to happen, you'll find here, is you'll have two things. One, either they'll get voted out and there'll be a change of policy, or two, the Labor will change their policy to win enough votes that therefore will make it more pro-investment because they will have to win the election. So that's all that's going to happen in that respect there in terms of politics and policy. Let's have a look at the results between also 1990 and 2007. So look, I should go even further than that. It's really 1990 to 2022 here, realistically, what I'm saying. But I've basically drawn up downturn and stagnation phases and then upturn and boom phases. So you'll see here there's a couple I want to point out just here. So you have basically you have a major cycle here. So what you've got here is, this is basically your whole, I know people could argue an 18.6 year Borrellian curve cycle or something like that. Look, I reckon it's decent. It's not to an exact T, but it's not too bad. But look, you've got basically here a whole property cycle showing itself here. You've got your 92 particularly, and then your 92 to 97, then your 2007 to 2012. You got the, I'd say, larger slowdown, and you got your mid slowdown there. Then in between that, you got your major boom of 97 to 2007, and then another short but sharp smaller boom between 2012 and 2017. And then you followed up with your major slowdown again. Now, Melbourne historically, when it goes through a major slowdown, what generally happens is it really starts to pick up in the next part of the cycle. So what happens is, you might get prices go up more than 100%. It's generally somewhere between 100 to 120%, like it did between 97 and 2007. So that's what I think will happen. I've just put in the sort of top right of the screen here where 2025 is. So it's pretty much stagnant to where that, should I say, COVID boom happened because of the low interest rate. But that's really a black swan event in terms of finance. So look, really what I'm expecting is from pretty much 2025, you'll get the upturn will begin. Now, look, I've predicted from memory, I think it's 2 to 6% growth or something like that, or 1 to 5. I can't remember, but in my prediction video, that's what I predicted. I think it'll happen, but you'll see next year it'll start to really, really take off even further. So look, you've missed the bottom for people that haven't bought yet. But you still got great opportunity this year and next because you got a lot of growth ahead in this cycle. So that's where we're at. Look, strong performers will continue to be strong performers as well. So this is just the Aussie Home Loans 25-year report again. Again, I love the graph because it's before COVID. And you'll just see here you've got basically a lot of similar suburbs showing up here. So you've got clearly your inner east is a strong performer. If you, I can just name a few suburbs there. So Ashburton, Box Hill, Malvern, they're all, should I say, in the inner east, Box Hill South as well. If you want to talk, you got your inner city as well. So you've got your Fairfield there, that's in your inner city. You've got Cremorne, that's also your inner city. Look, and if you want to look at others as well, you've also got your inner west that I do like a lot. So, Kingsville, Yarraville, Braybrook, Spotswood, Seddon, they're all in the inner west. And you also have, your Bayside as well. So you've got Hampton East, Hyatt, and you've got some more if you want to go further down as well on this graph. But these areas, I'm telling you right now, they're going to probably outperform this average annual trend because they've underperformed it in the future. So that's just something to consider in terms of Melbourne and where we're at the moment as well. Look, let's get into some of the best locations, and I'll just give a spoiler. I'll tell you my pick of the suburbs for each of these. So we'll start with one of my favourite areas, and that's the inner east of Melbourne. Look, the numbers in terms of rental yield aren't as strong, but if you're looking for something long-term and you only want to buy one property, this makes sense. Your inner east is historically an older money area of Melbourne. It's beautiful in terms of the greenery. So this is in Canterbury, this just photo. Look, my probably pick the inner east of Melbourne. Look, it is probably a hard toss-up, but it'd probably be Mont Albert North. It's very underpriced at the moment. You can pick it up for about $1.5 to $1.6 million, sometimes even cheaper if you're lucky. And I mean, it's surrounded by very historically, strong growth suburbs. It's done about 9.5 to 9.6% long-term, surrounded by great schools, great suburb in that. But that's my pick in the inner east. Let's get into one of my favourite locations. That's the inner west of Melbourne. Look, I've bought here a lot in the last 12 months, very, very strongly in the last 12 months. Inner west is your old kind of like Bronx area of Melbourne. It was historically your area where a lot of your wharfies and your working class lived, but it's completely gentrified your inner west. When I mean inner west, I mean draw a line between pretty much Williamstown, then straight up to Braybrook, then connect it with Footscray, then draw a line straight back down to Williamstown. What is in that triangle suburbs, that's basically suburbs that are worth buying. Exclude Brooklyn from that. But look, the inner west here, you have great demographics. You actually got stronger demographics in some suburbs and even the inner east. My pick, I like to a lot of people have probably heard before, is Yarraville at the moment. Probably one of my favourite suburbs to buy, and it's fantastic in terms of buying. I've got properties that are literally 3.5 to 4% yield for almost a flat $1 million. About 1 to 1.1 is realistic. Great area to buy. My favourite area in the whole country probably to buy at the moment, to be honest. That's my pick of the inner west. Bayside. Look, Bayside's probably the most beautiful pocket of Melbourne, in my opinion. I am a beach lover, so I do like it, despite it not having any proper beach with waves, but I'll get over it. This is just Brighton here, so you can see what it kind of looks like. That's just on the Golden Mile of Brighton, so the most expensive part of Brighton, basically. Look, if we're talking in terms of, what my pick of the the Bayside would be, it's a bit difficult because, you've got suburbs that over COVID, because of the lockdowns, that actually performed extremely well. But my pick probably in the Bayside would be somewhere, it'd be either Moorabbin or Hyatt. It'd be one of the two of them. So Both are large blocks, both surrounded by great suburbs. Very good transport, very good access to other areas. Good demographics, very owner occupied. You'll generally get a block that's like 500 or 600 meters square that you can develop in the future as well. A bit better yield as well. Like I want to say Brighton East or Bentley, but the issue is in Hyatt and Moorabbin, you can sometimes get like 3.5 to 4% yield as well if you're lucky and you know what you're doing. So that's probably my pick in the Bayside. So it's a little bit lower risk as well, but a great suburb in Hyatt and Moorabbin in the Bayside. Let's get into the inner city. So look, this area really is, I mean, historically, again, you have a lot of your cottages. It's funny, the inner city, you've got both, your wealthier kind of suburbs, and you've also got your pockets that are a little bit dodgy. So funny enough, you got, your probably your Alphington, Clifton Hill, that kind of area that, is quite wealthy and I'd say quite well off. But then you've also got your Collingwood, for example, that I'd say is a little bit dodgy in terms of, especially some pockets of it and some pockets of Richmond as well. But look, my pick in the inner city would be a suburb called Cremorne. And Cremorne's a tiny little suburb, and it's basically a suburb of the MCG. So, I mean, like you've got the second highest median income in Cremorne. I think it's nearly $3,000 a week, and your median monthly mortgage repayments are only $2,300 at the moment. So it's a suburb where everyone can easily afford their mortgage. It's probably one of the best suburbs in terms of your 30% rule in Melbourne, and probably even the country, to be honest. So that's my pick for the inner city in terms of suburbs in Melbourne. Look, probably one of the best historical areas as well is your inner east / southeast and south. Sorry, it's the inner south and southeast. So basically here, look, this area is pretty much your most livable and best area pretty much of all of Melbourne in terms of livability and your actual asset prices as well. This is home to pretty much anywhere from Malvern the whole way. If you draw a sort of circular line around to St Kilda and Port Melbourne, that's kind of the area I'm talking about. And you've got obviously your Chiracs, your Albert Parks. So your most expensive suburbs in Melbourne and your most expensive suburbs per square meter in Melbourne as well. So look, my pick here, it's very difficult actually to do though, because there's a lot of suburbs that I really like in this area that are, really, really good to buy. But my pick would probably be a suburb called Balaclava. And look, Balaclava it's not the balaclava you wear on your head. It's a suburb that's right next to St Kilda East. Look, the reason Balaclava is my pick here is because it's predominantly a Jewish Orthodox suburb. You got your synagogues, your Yeshiva college very close to it. Jewish people generally first of all, generally they only like investing in hard assets. So it's generally businesses and real estate they like investing. They're not huge stock kind of people or crypto people. That's what they invest in. And you'll find that the strict Jewish people, they won't actually use technology on, I think it's a Saturday or Sunday for every so many weeks per month, every certain week per month. Because I used to know someone who was very strict Jewish who lived in Coogee, in Sydney, who told me about it. But they generally like walking to their synagogues on those days of worship. They don't like using transport. So that's a reason there. And also Balaclava for a period of time in booms has 100% clearance rate. And that is crazy despite people sometimes even wanting 20% more than it's worth. There's times where Balaclava has 100% clearance rate, which is incredible. So that's my pick for the inner southeast and south in terms of Melbourne. So look, I hope this has been a good video. For everyone that didn't invest in Melbourne, look, I know probably at the start of the video I was telling people, look, you've made a bit of a mistake. Look, in saying that, you are not still late to the cycle. You're a little bit late, but you're not very late. Look, if you invested in 3 years, I'd say you are getting towards quite late. But look, it's still a great time to buy in Melbourne. Look, and if you are interested and serious about taking your financial future to the next level, I suggest you reach out via www.compoundinvest.com.au. Thanks again for watching everyone, and I'll see you in the next one.